the surprise resurgence in Australia's housing market since the start of the year has broadened and strengthened over the last few months. We're now seeing auction clearance rates well above 70%, a pretty firm result for the auction market. Price gains look to have accelerated again into May and broadened to more markets. We're seeing still very tight conditions in terms of listings at a very low level, but I think most importantly, our surveys are showing that consumers expect price gains to continue from here. That said, we're a little bit wary about where this particular upturn is going. It's a bit unusual in the scheme of things, and there's several reasons that we are a little bit wary about how it will be sustained. Well, it is an unusual situation, and we got caught by surprise at the start of the year when this resurgence came through. And there are some reasons to be wary about where we head from here. So firstly, the upturns are not being driven by interest rates. Interest rates have moved higher since the start of the year, and while we expect them to broadly hold steady through the second half, we're not seeing rate cuts, and there is a risk around interest rates potentially moving higher. The inflation outlook is very uncertain, and that may see the RBA move rates higher, and it may constrain the extent to which the RBA can ease rates next year. And moreover, consumers don't expect rates to move lower. Our survey is showing most consumers expect mortgage rates to move higher over the next 12 months. So it's a pretty unusual recovery in housing that moves ahead despite this interest rate headwind. I think we need to be a little bit wary of that. Related to this, affordability is still very stretched. For most buyers, the rise in interest rates and the cost of finance has more than offset any improvements from lower prices. So affordability is still very constrained, and that's showing through in buyer sentiment, which is still very weak. That's telling us that as this recovery continues, higher prices are likely to see any owner-occupier demand nobbled quite quickly. Again, a very unusual situation for an upturn. The third reason's more general. We have seen these price-led upswings in the past, but they've often been hard to sustain, or when they have sustained, they've become problematic. As I said, owner-occupier demand doesn't look likely to provide a lot of support from here, particularly if we continue to see price gains. And what we've seen in these cycles in the past is that investor activity or foreign buyer activity can become a more active component of the cycle, and that means it's maybe more susceptible to a sudden stop in demand or a sudden shift as that demand falls away and against a very thin market backdrop more generally. So I think we need to be very wary about this upturn. Yes, it's more convincing as we move forward. The price expectation piece in particular tells us it's pretty well locked in, but the extent to which we can sustain price gains straight away looks pretty limited given that interest rate and affordability backdrop. Well, in thinking about where we're going from here, if we look back to the start of the year, the key development has been around a resurgence in net migration inflows. Yes, there's been some developments around higher construction costs and low on-market supply, but the demand side is really coming back to this turnaround in net migration, which is showing through most clearly in the rental market, where we have very tight vacancy rates and a lift in rents. That turnaround in migration is probably also resetting expectations for other buyers as well. It looks like it's going to be sustained at a stronger pace. It looks like it's going to be associated with a more protracted period of very tight market conditions in terms of supply-demand balance. And it may also be having a direct impact. We're seeing net migration inflows running at around 400,000 at the moment. Total on-market supply across the major capital cities in Australia is just 75,000 properties. Barely 1.25% of all dwellings in the market are on market at the moment. That's a cyclical low going back to the GFC. But if we think about those 400,000 net migration inflow coming in, it only takes 5-10% of those inflows to be active purchases in the housing market, to be a discernible shift in the demand picture in the market. And so it may be both this direct and indirect and medium to longer term shift that is flowing through to the turnaround in market conditions. As I said, we're very wary about the sustainability of these gains against a backdrop of no real support coming from interest rates, still very stretched affordability. The wild card in this scenario is really the investor segment. In previous price-led upturns, investors have become more active and started to drive the cycle in terms of demand and price gains. So far, investors in Australia are still dormant, and with interest rates higher, there's a restraint around investors as well. If investors do become more active, starting to chase these price gains and these decent returns in terms of rental yields, that's where we could see a more problematic upturn emerge from the point of view of policymakers. In a lot of ways, this upturn is both surprising that it's been driven without interest rate cuts, but from a policy point of view, it's sort of not been sanctioned by the RBA. It's not been green-lighted by rate cuts in a way. And so they'll be uncomfortable about the extent to which we see strength emerge. Look, on balance, we think it's still not a self-sustaining upturn, and that prices will be leaning more towards flat than gains over the course of this year, with momentum only really gaining traction once the RBA starts to move into a clear easing cycle next year. But as I said, it's surprising with the way it's turned around so quickly to date, and that upturn is looking pretty well established now, and there's a lot of tensions in the market near term around interest rates, owner-occupied demand, and there's other drivers around physical supply and demand for property.